every single day, you're hit with, well, a tidal wave of global news headlines flooding in from every corner of the world. It can feel like trying to drink from a fire hose, right? One moment you're hearing about oil prices, the next, a political shift on a different continent. And it's genuinely hard to connect the dots and see how it all links back to your world. Well, that's exactly why we're here. For this deep dive, we've pulled together a stack of global news from just the past 12 hours. This is as of July 16, 2025. Our mission is really to cut through the noise, uncover those crucial insights, and reveal the surprising connections lurking within. We want to leave you truly well informed on what's shaping the world right now without feeling completely overwhelmed.
That's absolutely the core of it. These aren't just random events unfolding in isolation. If you look closely, each headline, each piece of data, it's a thread woven into a much larger, interconnected global story. And by connecting these threads, you start to see the powerful underlying currents driving what might initially seem like disparate news. And that's where you gain a much richer and, I think, more actionable understanding of the world around you.
Okay, so let's jump right into the heart of it. Our first big segment, global economic currents. We're talking oil, currencies, and that ever-present dance of inflation. First up, oil prices. We've seen a bit of an upward edge with Brent crude, that's the international benchmark, sitting around $68.84 a barrel. And West Texas Intermediate, WTI, the U.S. benchmark, is at $66.77. Now, this rise seems largely fueled by strong summer travel demand, particularly in the U.S. and China.
Yeah, but what's interesting here is that even with that robust demand, those price gains aren't exactly, skyrocketing. They're being capped. There's a mix of, well, mixed global economic signals and these persistent tariff threats floating around. For instance, there's talk of potential new duties on Russian oil.
Yeah.
So you have this fundamental push from demand, but it's constantly battling against these broader economic anxieties and geopolitical uncertainties. It creates a very complex kind of a tug of war in the market.
Right, a real push and pull.
Hmm.
And speaking of fascinating complexities, the U.S. dollar. This is really intriguing. It's actually experienced its steepest decline since floating currencies began. Some traders are even calling it an anti-bubble. That sounds kind of counterintuitive, doesn't it?
Yeah.
What exactly is an anti-bubble, and why is the dollar suddenly taking such a dive?
That's a great question, because an anti-bubble is quite, well, unique. It refers to a sustained decline that seems detached from the usual economic fundamentals. Normally, a currency's value is tied to things like interest rates or economic growth. But in this case, the dollar's drop seems fueled by a mix of investor pessimism, maybe some of former President Trump's rhetoric on devaluation, and just a general climate of global uncertainty. It's called an anti-bubble because its decline isn't necessarily reflecting a fundamental weakness in the U.S. economy's core. It's more like a disillusionment or lack of confidence from investors that's creating its own downward momentum. It's almost a psychological phenomenon as much as an economic one. Really fascinating.
Okay, so shifting gears slightly but still connected, let's talk inflation. We've got this really interesting divergence playing out globally. India just hit a 6-year low in inflation, which is pretty remarkable. But over here in the U.S., the Consumer Price Index, the CPI, that measure of average prices consumers pay, it's actually climbing. What does this kind of split mean for global financial flows, for investment strategies?
Well, this divergence has a very direct ripple effect. It's already weakened the dollar-rupee forward premium. That's basically the market's expectation for the future exchange rate between the two currencies. The Indian rupee itself strengthened slightly to 85.78 against the dollar. And crucially, expectations are now shifting towards potential Indian rate cuts because their inflation seems under control. That could stimulate their economy.
Okay, so lower inflation there means maybe rate cuts are coming.
Exactly. But now here's where those interconnected threads really come in, and it gets a bit complex. Despite that anti-bubble narrative we just discussed for the dollar overall, the U.S. dollar index, which tracks the dollar against a basket of other major currencies, actually rose about 0.5%. And on top of that, 30-year Treasury yields topped 5%, signaling higher borrowing costs in the U.S.
Wait, so the dollar index went up and yields went up, even with the broader dollar weakness?
Right? These seemingly contradictory developments actually put pressure back on the rupee and weighed on capital flows into emerging markets.
Yeah.
It just shows how dynamic and multifaceted currency movements truly are. It's never just one thing driving it. It's a constant push and pull.
Okay, that makes sense. Building on those economic pressures, let's talk about something that really highlights these intricate global connections: tariffs and trade policies. We're seeing a Pretty direct link, it seems, between rising U.S. factory prices, that's the Producer Price Index, or PPI, and consumer prices, and the tariffs currently in place.
That's a crucial point, and it's important to understand how that link works. Tariffs essentially act like a tax on imported goods. When those goods, or maybe the raw materials needed to make them, become more expensive because of tariffs, businesses face higher costs. That's what you see in the Producer Price Index. And eventually, these higher costs often get passed on to consumers, pushing up the Consumer Price Index, the CPI we mentioned earlier. And these tariff-driven price increases, well, they actually lend some support to the Federal Reserve's caution, their hesitancy on cutting interest rates. We saw former President Trump criticize the Fed's stance, even hinting at replacing Chair Powell. But interestingly, markets seemed largely unmoved by those remarks, perhaps seeing them more as political maneuvering than an immediate policy shift.
Okay, so the Fed's watching this inflation data, which is partly driven by tariffs. Got it.
Now, stepping back from the numbers for a moment, let's broaden our view to the global stage. There's a major event unfolding right now, the G20 Finance Summit down in South Africa. Amidst all these economic shifts and these trade tensions we're discussing, what are the key issues being tackled there? How do they connect? Yeah, the summit's agenda is absolutely packed and really highlights how interconnected these global challenges are. They're addressing crucial issues like debt relief for African nations, development financing, climate action. But very significantly, they're also grappling with escalating global trade tensions. Specifically, the U.S. tariff pressure on key economies is a big topic. It's a complex balancing act, really, because progress on things like climate action or debt relief can be seriously hampered if trade relations are strained and global cooperation falters. It all intertwines.
And you can actually see the direct impact of these trade tensions hitting markets, for example, in Europe. Europe's broad market index, the STOXX 600, slipped about 0.3%.
Exactly. And what's particularly illustrative here is looking at a specific company like ASML. This is a Dutch company, a major European tech firm, absolutely critical to the global semiconductor supply chain.
Right. They make the machines that make the chips.
Precisely. Their shares dropped a significant 6.7% after they released weaker outlooks. And part of that was explicitly tied to growing worries over trade-driven inflation and potential restrictions. So this isn't just about general market sentiment. It shows how these trade concerns can directly impact a major company's ability to operate across borders, affecting their supply chains, their customers, and ultimately their stock performance. It's a very tangible consequence.
That ripple effect reached Asian markets too, didn't it? Asian equities mostly fell across the board. Japan's Nikkei was flat, but Korea and Australia were both down around 1%, and China's CSI 300 dropped about 0.5%.
Yeah, that broad slide in Asia was largely due to that firmer dollar. We talked about the dollar index rising and the higher U.S. inflation figures tempering the overall outlook. However, even within this general downturn, we saw a standout. NVIDIA. The chipmaker actually rallied 4%. It raises an important point. Even when the broader market is feeling the squeeze from economic pressures or trade tensions, certain sectors, especially those driven by really strong specific demand like AI or advanced computing, well, they can still thrive. They can offer distinct investment opportunities. It just reminds us that not everything moves in lockstep.
Okay, that's a good point. Now, beyond the balance sheets and trade routes, there's also a powerful geopolitical game unfolding. Let's shift focus a bit to U.S.-Ukraine defense efforts. We're seeing a plan, apparently, from former President Trump and the NATO chief Mark Rutte gaining some serious momentum. What's happening there?
Well, what's fascinating here is the proposed shift in the Ukraine aid dynamic. The plan, as reported, outlines that European allies will contribute Patriot missile systems directly to Ukraine, and then the U.S. would provide replacements for those European stockpiles.
Okay. So Europe gives, U.S. replaces.
Exactly. This could be a really significant development for the future of aid. It potentially changes the whole burden-sharing structure, making support for Ukraine perhaps more sustainable, maybe less reliant solely on U.S. direct contributions in the long term. It's one to watch.
Definitely. And shifting continents, again, over in Japan, we're seeing something else developing, a surge in nationalist sentiment. Apparently, the far-right Senseido Party is gaining traction ahead of Japan's upper house elections.
Yes, and this trend in Japan really connects to some broader global political shifts we're seeing. Senseido's platform is largely centered on campaigning against immigration. This rise in nationalist sentiment, well, it isn't isolated to Japan. It mirrors trends of protectionism and shifting political landscapes that we're observing in various countries around the world. It's kind of a pushback against globalization in some ways, perhaps fueled by economic anxieties or cultural concerns leading to a desire for more insular policies.
So what does this all mean? We've covered an incredible amount of ground in this deep dive, haven't we? We started with, oil prices fluctuating, the dollar's curious anti-bubble, then moved through global summits tackling debt and trade wars, right into shifting geopolitical alliances, and now rising nationalism.
Yeah, absolutely. And I think the key takeaway here really is that these aren't isolated news bites that you just skim over. They are all deeply interconnected. These threads make up this rapidly evolving global tapestry. You can truly see how economic forces, political decisions, societal shifts, they're constantly influencing one another. It creates this complex dynamic world we live in. Understanding one piece often illuminates another. It's all linked.
Right. And as you reflect on all of this, here's a final provocative thought we want to leave you with. Given this increasing interconnectedness of global finance, trade, and geopolitics that we've been talking about, how might the seemingly independent rise of nationalist sentiment in one region, say Japan, combined with escalating tariff threats in another, like from the US, how might those together fundamentally alter the landscape for international cooperation on really big issues like climate action or global debt relief in the years to come? Something